Luke, what do you think? What would be different in your life now if you went it alone?
I think the fear component would be and that's always been that, okay, well, I'll just sit on the fence about that. And look, I've done that with having a great knowledge of the share market. It's certainly, I've got a bit of visibility and understanding of it now, and woulda, shoulda, coulda at certain times. If I'd been a little bit more confident around making some of those decisions, I would have maybe made some probably a little bit more riskier investments that no doubt if and when at the time could have paid off significantly by now. So I would have probably still been in that what's the word, paralysis, fear mode, and in some respects probably one of the blockers that I was really facing was that how to further the property investment goals, and that was sort of something that I was always quite passionate about. My partner's also in the real estate game, and she's in that sort of prop tech space, and so we're both really quite keen on the real estate angle. But I think back before we started this exercise, that structure that we had in place was a real barrier for us, and being able to sort of revise all of that and help continue. I mean, we're as I say, we're just about to go again, and it's I think just being in that position and having everything in done the right way now has been a major benefit to us as well. So definitely fear, paralysis, and probably just would have done nothing and maybe still been sitting here 12 months later talking about it, worried about COVID, how it's going to affect us, and what sort of what impact, or whether or not we're better to keep the money in the bank. And that was a thing, right? Having money sitting in an offset, really doing nothing for you, and your money not working for you, and really sitting on the fence, and probably preventing us from really tapping into opportunities that we could have if we had a little bit more confidence and had the right structure in place like we do now.
It's that fear. It's like with your, career moves, things in business, all of that stuff, that the safe option is comfortable, because keeping the money in the offset account and just socking it away and knowing that there's a buffer there, that's a comfortable option. And sometimes that's the very best possible thing that you can do. But it's when you take the smart risks, like figure out what the risks are, appropriately manage those, and then how much risk is right for you, that's what allows you to play a bigger game, to get better results, to build more momentum. And we see so many people that are just following that strategy, and it's like, yes, it's good, like it's okay, it's not a bad thing to do, but there's just so much more potential. And these days, especially because like property markets, expensive all around Australia, living a good lifestyle is expensive. Our cost of living is high, that if you want to create that financial freedom and do that you need, just buying a property and socking away money in your offset account is unlikely to get you to where you want to be. And even if it does, it means that you've missed a lot of opportunities to get more out of what you've got along the way.
Yeah, I think to your point, one of the biggest things as well is that barrier around lifestyle. And, okay, well, how's this going to affect my lifestyle if I want to go on that trip and I want to do that? And as I said earlier, you can still do that stuff if you've got the right plan in place. But that was a big thing. Oh, well, if I'm going to go and do that, or we can go and do that, and it's going to cost X amount. It wasn't looking at it from okay, well, how can I, help attain those goals? It was right here and now, and I didn't really want certain things affecting our lifestyle. And it's quite that whole process. They say you spend your money, you piss it up against the wall, so to speak, in your 20s, and start to probably take until your early 30s, and probably start to take it a little bit serious in your mid 30s, and then go on from there. And I tell you what, very much. Very much the way it was to a certain extent. So it's just taking things a lot more seriously, and having the plan in place to try and achieve what we want to achieve long term is
I think a lot of people kick themselves for not having started this process sooner. It doesn't matter if you start it 25 or 35. I was just talking to a 25-year-old, and it was the same thing. He's like, oh, I should have done it 3 years ago. I had it in my mind and didn't. I think it's just a natural psychology thing that we're always like, oh, I saw that share and the share price was this, and I saw the property market and the property was this, and then time just goes on and we remember back to those things and go, shit, why didn't we do that? But yeah, we can't take advantage of all the opportunities, but you want to take advantage of some so that you can, get things moving.